seeing implied vols on something like GameStop go to 1,000, right, on a day. And I don't know if those in the room remember the trades that happened like off of it. So not just on a GameStop, but like on an XRT, because essentially at some point it became 40% of the entire ETF. And then people were trading off that too, and it was destabilizing the weights of the IWM. So, I guess that should have told us that there was froth in the market. But even still, it's hard, of course, unless you're in hindsight to think of that. But, so what we started to do institutionally was say, this is important because you could be a Melvin, and of course it directly impacts you. But it's also important because of what it can do to the ETFs around it, which I think was a secondary impact that we kind of realized halfway through it. And so we started monitoring skew inversions. So just very simply, you take your normalized skew levels, 25 delta put to call over at the money, and then anything that's kind of vastly negative in S&P or IWM starts saying, okay, like, what's the deal there? And then, of course, you have some things like a gold, which are supposed to be skew inverted, but something like a GameStop or AMC, or there were so many other names at the time that shouldn't be, and essentially using that as a starting point, either to do trades, because 1x2s actually were kind of the best structure if you believed there was going to be mean reversion, or even for a way for people who were just fundamental portfolio managers to know that that was happening. And so, one stat I'll give you is, because we started that during the pandemic, we started tracking about 1,500 to 2,000 names, and that went from at the peak being, 100 names or something to being a handful now. So just in terms of having some stat to say where are we in terms of the froth, that's obviously gone away. But on kind of an economic and fundamental level, that's gone away because of the massive change in what the central banks have had to do.